Hello, everyone. I hope you're all doing well. My name is Quinn McDaniel. I am a junior studying finance in the AIM program, covering international consumer staples. Today, I'll be presenting and offering a recommendation of Canada Goose, ticker GOOS. Canada Goose engages in designing, manufacturing, distributing, and retailing luxury outerwear for men, women, and children. Goose operates through two business segments, the first one being wholesale, which accounted for 44.3% of fiscal year 20 revenue, and direct-to-consumer, which accounted for 54.8% of fiscal year 20 revenue. The company was founded in 1957 and is currently headquartered in Toronto, Canada. The picture on your right shows a wide variety of products that Canada Goose offers from their core, fall and winter, spring, and moving on to my recommendation. Canada Goose Holdings has developed into one of the world's leading makers of performance luxury outdoor apparel. Their products were born from the harsh weather demands of the Arctic and inspired by continual innovation and unmatched craftsmanship. Already during fiscal year 21, total revenue has increased for the first time since the onset of the pandemic. Compared to fiscal year 20, a total revenue of $474 million versus $452 million, which has been driven by global e-commerce revenue growth of 39.3%. The increase is also the result of continued store expansion in China, driving a direct-to-consumer or DTC revenue increase of 41.7%. Goose is motivated to continue their investment into the development of innovative new products with expertise from their acquisition in 2018 of Baffin Inc., a Canadian designer and manufacturer of performance outdoor and industrial footwear. Purchased by Goose for about $35 million in cash and stock, this acquisition contributed to a $29.3 million increase in Goose's wholesale channel from fiscal year 19 to fiscal year 20. With Baffin's experience, infrastructure, and technology, Goose is currently in the process of developing a separate Canada Goose footwear offering in the medium to long term. While the brand is recognized and coveted globally, Goose aims to meaningfully increase awareness, consideration, and conversion. All in all, it is recommended that Goose be added to the International AIM Equity Fund with a price target of $51.20, representing an upside of 19.3%. Moving on to the drivers of Canada Goose. To start off, Canada Goose has put growth plans in place for their business in China. In the past year, Goose has more than doubled the number of stores they operate in the market and have already delivered strong results with a 41.7% increase in their Chinese direct-to-consumer revenue. These solid gains are expected to continue as existing stores in China are returning to pre-pandemic levels and growth continues to generate from 4 additional stores as Goose continues its evolution as a three-season brand involving lighter weight goods which are causing attraction in the warmer regions in China. Management asserts that they are still quite early in their journey in mainland China, and despite a heavy revenue decline in Q2 as a whole, which was a negative 63% year-to-year, China still produced positive year-to-year growth. Secondly, Canada Goose has recently introduced Human Nature, which is a purpose-based platform that unites their sustainability and value-based initiatives. The company works relentlessly to strengthen their communities, protect the planet, and create a better future for generations to come. With this platform, Goose is setting out to be carbon neutral by 2025 and will introduce reclaimed fur into their supply chain by 2022, which will end the purchasing of new fur for the manufacturing of parkas. This platform can also create more opportunities for Goose to be held in many ESG funds, which should increase demand for stock to be held by other investors. Lastly, Adam Meek, Goose's new general manager of footwear and accessories, is the new leader of the ongoing development and execution of the company's new global footwear strategy. With past experience at Nike, Sperry, and Lacoste, Meek plans to define and develop this new category for the company in a way that no other brand has before. As a completely new category, Goose will be able to leverage its existing brand power into new high-margin products. Goose is currently on track to launch the category midway through this year and a full commercial launch in years to follow. In terms of valuation, in order to reach an intrinsic value for Goose, a 5-year DCF model was constructed. Using a terminal growth rate of 1.5% and a WACC of 9.19%, an intrinsic value of $50.42 was reached. A sensitivity analysis on the terminal growth rate and WACC resulted in a $47.85 to $53.62 target range. VF Corporation, Bruno Cucinelli, Moncler, Under Armour, and Columbia Sportswear Company were used as peer plays to determine the following relative valuation metrics. An EV/EBITDA multiple valuation was calculated using a 35.94 times weighted average, resulting in a price target of $44.97. Additionally, a PE multiple valuation was conducted using a weighted average of 57.28 times, generating a price target of $59.36. By weighing the models 35, 35, 30, a price target of $51.20 was reached, resulting in a 19.3% upside. Goose currently does not pay In addition to drivers, Canada Goose may also bring some risks. The first risk that I find noteworthy is about foreign exchange rates. As Canada Goose continues to sell products to customers outside of Canada, the company is exposed to fluctuations in foreign currency exchange rates, which can increase the variability of operating costs and future cash flows denominated in local currencies. The second risk is about protesters and activists. Since Goose's products include certain animal products, the attention of animal welfare activists and protesters has been drawn and may continue to be drawn in the future, which can disrupt store sales, cause store closures, or turn public opinion against their products. Finally, the last risk is about climate change trends. The company's business is highly dependent on cold weather seasons, and as global weather patterns trend warmer, the company's financial condition, operations, or cash flows finishing strong with Canada Goose's management team. The President and Chief Executive Officer, Danny Rice, has held his role since 2001 and has previously worked in almost every area of the company. Accompanying Dan is Executive Vice President and Chief Financial Officer, Jonathan Sinclair. Before joining Goose in 2018, Sinclair held the same roles at Jimmy Choo plc from 2014 to 2018. And last but not least, John Moran, the Executive Vice President of Manufacturing and Supply Chain for Canada Goose. If you have any questions related to Canada Goose and my pitch, join us on Teams at 1 p.m. this Friday, February 12th, or you can go on the D2L discussion board and leave your question there. I look forward to reading through and answering all of your questions to the best of my ability. Thanks for listening, guys.